truth really is, with any good portfolio, you want to make sure you're seeing that return long term on your account. So the day that you buy into that stock or share, for example, you're going to want to see that growth, and you're going to want to hold it potentially for the rest of your life, knowing that you're going to profit from that, whether that be in growth or whether that be in dividends. Let's get into the video. Today, we are going to be talking about dividends. Hi guys, and welcome back to my channel. My name is Jason Lloyd. If you haven't already, do make sure to subscribe for more content on investing so we can be together on this journey, and I can hopefully help you out with any questions that you have. Maybe you're getting started, maybe you're someone that is an experienced investor. So hopefully that you will find some useful content on this video. So today's video, I'm going to be talking about dividends. What exactly is a dividend? So a dividend is technically a thank you where a company will give you a certain percentage of the money back for the amount of money you have invested into their company. So if I had invested £1,000, let's say, into McDonald's, they may say, we're going to pay you a 5% annual dividend. So I'm going to get a 5% return as a thank you for holding that £1,000 share in McDonald's. So I'm going to see that nice, lovely dividend, hopefully coming into my account in payments, either monthly, quarterly, or potentially annually, depending on when the company wants to pay me. Now, things to be aware of about dividends. So if I was a dividend investor, it would not matter at what price I bought a share of a company at, because I'm not after that long-term growth, even though I may be wanting that as well. I'm after that nice, juicy dividend. So it doesn't matter if I'm holding it for 5 or 10 or 15 years, I'm still going to be getting those annual payments that I'm owed through those dividends. This is also another reason why dividend investors sometimes do very well in recessions, because in a recession, if I was a growth investor, I may be driven by fear. When the stock market crashes that we've seen recently, we've seen highs go down as low as 60% from where they were 4 years ago, for example, in the S&P 500 and many stocks across all sectors of the board, because we are driven of fear, because there's an economic crisis due to the COVID-19, and investors are scared about where they're putting their money. They're scared that these economies, that these companies are not going to recover, and they don't know what is going to happen. So rather than being driven for the success of growth, they are driven by the fear, and they're going to lose money. That is their thought. So that's why we see these big drops in these stocks. But if I was a dividend investor, I wouldn't be worried, because I could hold the stock, and it doesn't matter whether it moves up or whether it moves down, because all I'm after is that dividend payment. And if I'm getting that growth long term on the account as well, once the economies do recover in 2 or 3 years, say, and there is a vaccine found, then I'm also going to be seeing that lovely long-term recovery also, which is going to see me with a higher percent profit on my account, because I've not only got my dividend payments, but I've also got my growth investment payment as well. So technically, you can have two types of investors. You can be an investor through growth, or you can be an investor through dividend. So if we're going to be buying a stock, for example, or an index fund, and we want to see that long-term growth, we're going to buy it hopefully while it's low, and we're going to sell it while it's high. And then we're going to actually have our profit there in between, which is our growth or return that we've held over several years, and we've made our investments, and we've done our research correct, and we've actually got a return of profit. Now, the other type of investor is the dividend investor. So these are particular stocks, for example, that you can buy, you can hold forever, and hopefully you will also see not only those dividends coming back to you in those payments annually, but you will also see a growth on the stocks or particular indexes that you are holding. So as dividend investors, this essentially means we don't need to worry about the price of a stock, of whether it's moving up or down. The dividend payment is going to stay exactly the same as it was when we first invested, again, providing the shareholder doesn't cut or freeze the asset of those dividends. So if, for example, I bought a stock in Disney and it was $500 worth, what if the stock dropped to $250? Well, I shouldn't be worried as a dividend investor, because I should still be getting those monthly or those quarterly payments depending on when the company was going to pay me those assets as a thank you for being a part of that investment with their company. Now, not all stocks and ETFs do actually have a dividend yield, but the majority do. So it's always worth doing your own research to know exactly if you're going to invest in a company, whether they do or not pay dividends. Now, there are some companies which are also known as blue chip dividends. So these are companies like Coca-Cola, Pepsi, 3M. These are the really, really big ones that you can see in the S&P 500, for example. Now, these companies have been around for absolutely years. They know their business, they know their stuff. And what they've had to do in order to earn that rank of a blue chip dividend, they're almost like the dividend kings. They've had to increase their dividends every single year for 50 years. Now, these are the type of dividends that you may be interested in if you are a dividend tracker. So do be sure to check out the FTSE All Over World Index Tracker if you are interested in some of these companies. This essentially looks at the global economies altogether, and it looks at 1,630 different companies individually, and it will take an average and it will dish out a dividend for you based on these 1,630 companies. So if you are interested, then do make sure you check that out. That is under the stock symbol VHYL. And guys, it's totally worth noting that these companies have been through major recessions. They've been through the stock market crash in 2008, in 1990. For example, they have gotten themselves through. They know what they're talking about, and that is why they have earned the title of a blue chip dividend. And inside this tracker, you've got companies such as Johnson & Johnson, you've got companies in the financial sector, you've got companies in the energy and gas sector, so it's completely diversified and it's very spread out. Now, the payments may be made up quarterly or they may be made up monthly. It completely depends on the company. They will actually release a date, so you'd have to be holding the share before that release date, which is the ex-dividend date, and then there'll be a payment later on, which will be the dividend date. Usually to stop people obviously buying and selling on the day and the day after and making big profits and cashing out, that's a thing called capturing dividends, which we'll go into in another video because it's a very complicated thing to understand right now, especially if you're a new investor. Now, again, make sure that if you are going to invest in any of the companies that I have spoken about or any companies that you've seen anyone else speak about, do make sure to do all of your own research first. This is so important because as investors, we are all different and we are all in a different financial situation. So you must first assess how much money you have that you want to invest and how much money are you willing to risk. And then you can start to really see where it is that you want to place your investments for a long-term future. But whatever you're doing, if you're investing, I still think that you're investing smartly, because rather than holding on to cash, which is a dead end, you're actually out there and you're trying to get that nice growth and accumulation by compounding your money. So good for you and well done for doing so. Which reminds me of a saying that I once learned, that is, dividends are a matter of fact and profits are a matter of opinion. Because of course, we can try and profit if we want to buy into a stock, but there's no telling whether a stock is going to go up or down, because none of us can predict the future of the stock market and none of us will ever be able to do that. But the matter of fact is that a dividend is a dividend, and if it states that it is 3, 4 or 5%, whatever percent that dividend is, it's not going to change, providing that the shareholder doesn't freeze the asset and doesn't cut the dividend. And again, if you are a new investor and you're looking to invest, please make sure to look at any fees associated with any platform that you are going to open up an account with. I use 212 Trading, for example, and they have a free share up to £100 if you are a new investor. I do have an affiliate link, which I will leave in the description below, so you will be entitled to get a free share up to £100 if you are to open an account with them through my link. Do make sure to check those fees though, because you may end up paying more in fees than you will actually in gaining profit, which is why I use 212, because they have a zero trading fee commission platform. And if you haven't already, do make sure to smash the like button below so that anyone else that's looking for this important information will be able to get the help that they need. I hope that you have found the content of this valuable, and I hope that you have learned something new about dividends today. So I will be making another video very soon, and I'll be looking at some of the top dividend payers that I believe you should have in your portfolio, and it will also include some of the dividend payers that I have in my portfolio. So do stay tuned and be sure to subscribe and turn on the notification bell so you'll be notified when I release that video. Whatever you're doing, have a lovely day, and I'll see you back on my channel soon. Ciao for now.